Welcome, ladies and gentlemen. So, what is there to report today in the good old stock market, cryptocurrency market madness that we're witnessing right now? Well, nothing much has been happening. Seems like it's a little bit quiet across the board. Now, we do have Trump trying to approach Congress today to get this bill effectively sorted in terms of votes in regards to the tax cuts, but it's not being welcomed because, of course, the Democrats are like, look, man, just don't do that. Like, please, you're going to increase inflation and it's just going to be a problem. You can't do that. We've already had our downgrade, but quite frankly, Besant, quote, said, who cares? That's what he said about the downgrade of the US credit rating. Who cares? It's a little bit of a conflicting thing to hear from Treasury Secretary as such. But anyways, what's good, ladies and gentlemen? Today, what we're going to talk about. Just going to go through a couple of things that have come to my attention, and it is relatively quiet across the board. I'm going to break down those articles and give you a perspective on how you should really approach them. More importantly, we're just going to break down Bitcoin price action and understand where we are in terms of order flow so that we can work out how likely price is going to make a move from one point to the next. And of course, yes, is the bull run going to be compromised? God forbid it was a clickbait title. God forbid I talk about anything else other than what the title is saying. But I know by the time you leave this live, you're going to look back at that title and understand exactly why I put it. So let's get with the program, ladies and gentlemen. Let's have a conversation, man. Here we go. So stocks rally set to stall after a 6-day run. Well, we know that that's the case. If we just go over to last night in terms of the screenshot that we took, where were we with this screenshot? Where is it? Was it last night? I believe it was. Hold on a second. Was that it? Yes, it was. There we go. Here we are. So this is the rally that they're making reference to. All right. So we've had a very decent amount of volume coming into the stock market. It has been primarily behind tech market as such, because there's a lot of advancements going on right now with AI, which is really an advertisement to encourage investors to get involved in AI. And I've said this before, I do believe that the bull market is going to be sustained off the back of AI markets coming into flavor with investors seeing optimism across the board. Now, the article just goes on to talk about that, of course, with a 6-day winning streak. They're saying that the bull market is coming into a little bit of a compromise and that it's starting to show signs of slowing down. Word on the street is that they're expecting that US stocks are going to be outperformed by European stocks, but primarily worldwide stocks. Now, let's just put things into perspective. In front of you is this chart, which shows you the constituent stocks above the 200-day moving average. And this is based on global, okay? So how many stocks right now globally across the world in all the exchanges, how are they performing? And it says that 59.63% of those stocks are above the 200-day moving average. So it would be consistent to say that the bull market is showing a relatively decent amount of weight behind the idea of prices continuing higher. Now, the problem that we do have, ladies and gentlemen, is we don't know where we are with the tariffs. There's no conversation about the tariffs right now. And the only thing that's coming into play next is the deal that they are going to have with the European zone. Now, what I believe is going on is this. Trump's trying to get this story behind the bill to get passed for the tax cuts. Here it is right here. It says here that Trump tax bill passes key panel to advance in US Congress. And it says here that he's trying to cut the taxes. Besant, of course, as I said earlier, says who cares about the downgrade? And Democrats warn that downgrade and tax bill signal recession and higher interest rates. So what we're waiting for right now, and Trump is actually on his way. I mean, we've just got, here we go. Here is the actual thing right now. He's talking. Hold on a second, ladies and gentlemen. Trump is talking right now. Let's just quickly bring that up for you, just for a split second to put things into perspective.
I don't think he knew. I said there's nobody that could want an open border. Nobody.
Here we
now
go.
I find out that it wasn't him.
It's not really that
Who
loud-ish.
was operating the auto pen? It's a very serious thing. We had a president that didn't sign
That should be it.
anything. He auto-penned almost everything. He opened
Come on.
the borders of the United States of America. And I kept saying, who would do such a thing? Allowing
Not really
criminals to
saying
pour
too
in
much
from
right
all
now,
over
but
the world, not just South America, all over the world.
he ain't saying much. Can we hear it? I don't think we can hear it. Hold on. No, I'm not getting no sound from it. Don't know why. Anyways, never mind, ladies and gentlemen. So that's really what's going on right now, is this story about the tax bill. And this is obviously, in my opinion, a little bit of a retaliation to the fact that the yields have moved up so much. Look, going into it quickly, the 2-year yield currently trading positive again. 5-year yield trading positive at 0.49%, 10 years coming in at 0.8%, and the 30-year coming up very strongly at 1.06%. So if you've got these yields going up, it is going to be putting pressure on the stock market, which would then justify the idea of a pullback. And there's nothing wrong with price correcting. Please, when we talk about price coming back down, it doesn't mean that the bull market is over. It means that they need to buy again so that they can effectively offer higher. Let me justify why the bull market might not be over just yet. Look, in front of you is the smart money, dumb money. We know dumb money is very confident, but smart money is somewhat neutral. And that's relative with it being so flat inside of this range. But look at the frequency of activity that's going on in the market. If the blue line goes up, it means that assets across the board are going down because smart money is buying. If the blue line goes down, it means smart money is starting to sell. Fundamentally, based on how this chart behaves, if we start to see the blue line continue to go lower, that would then give freedom for the market to continue higher. Now, going into it, if the stock market can sustain itself at these levels, then going in towards the all-time high would be the next logical thing. And then they would have then effectively been able to sell as much stock as possible at the highest premium possible, because then by the time the NASDAQ does make claim towards the all-time high, that in principle should then be justified with Bitcoin's move to the all-time high. We know accumulation is happening with cryptocurrency across the board. So we know that with inflows going into the ETF, 633,000, there's a peak balance. Grayscale just seems to be bouncing up and down, but it's all about the BlackRock ETF, and it is showing institutional investment coming into cryptocurrency. Rolling it back into the order flow with Bitcoin to put things into perspective. When I say I want to see Bitcoin come down, it's not because I'm bearish. I don't even know why I justify it, but I say it just for anybody that is new coming through to the channel. You look at my title and you think, oh my God, it's a warning, doom and gloom. No, it's not. Quite frankly, it's the opposite, because when they drop it, it means they buy. Look, you've got a gang of information here about, look, 42 million again at 104,300. All right. Someone's prepared to buy. Over here, look, someone bought 18 million. And then a little bit further up, they brought 60 million. So anybody that was like, oh my God, Bitcoin's going down, it's time to sell the market, mugged themselves off, because if they weren't paying attention to the fact that there was someone buying a significant amount of Bitcoin in this area, they've effectively missed out on this move to the upside. And you can see what's going on. They are buying it and they are selling it. And you can see that there is interest in the offers coming in. So that could be suggestive that the future is going to look like Bitcoin's going to pump towards its all-time high. Now, again, you've got to be realistic with your expectations of Bitcoin's price. Unfortunately, cryptocurrency is plagued with the idea that Bitcoin goes up $1. Now we're going to see Bitcoin travel all the way to $300,000. Doesn't make sense. There is price projections of Bitcoin going up towards the 135K region as the Golden Cross and ETF inflows fuel bullish momentum. So there you've got the idea of justifying the reason for a bullish market to sustain itself in cryptocurrency. Look at what's going on across the board. The stock market is very close towards its all-time highs. It's only evident that it's going to clear that point. There seems to be a calming in the storm before these tariffs come into play. The euro itself, look, the euro is taking a little bit of a tumble to the downside, but that's the next big thing that's going to happen from a macro perspective. What's going to be the trade deal that euro and the US are going to have? There is no scope about when they're going to have any meetings. I mean, we go to Trump's calendar. Hold on a second. There we go. And today, you know, see, the thing is, right, they were talking about him going to the White House, but now all of a sudden he's going elsewhere. He's now at the Capitol Hill over the tax cut story. Okay, so we know that Trump's going to be talking throughout the day and he's going to be saying something. So depending on the success of this bill that he's trying to get passed is going to dictate whether or not the stock market's going to move higher or not. Naturally, cutting tax is going to be great, and that's really good. But looking at where we are right now in terms of the story of debt for the US, it kind of makes the Democrats be a little bit like, hold on a second, Trump, man, we've got problems in our deficit story. Cutting taxes is going to be a bit of an issue. But Trump's idea is that the tariffs are going to, of course, generate that money. But it's always going to be what if scenarios. Now, I want to draw your attention to something important to justify why maybe the bullish market could still sustain itself. Check this out. Japan's long-term borrowing costs hit record high on demand fears. So they just did a bond auction per se, and they didn't get the interest that they were expecting. Okay. Now, fundamentally, you think to yourself, oh my God, what's going to happen? Where's the story with Japan? What are they going to do? Are they going to increase the interest rates? Are they going to cut the interest rates? Because we know historically, when Japan increases its interest rates, the market tends to not like that story. Okay. Now, what I want to draw your attention to is this. This is the current Japanese inflation rate, which currently sits at around 3.6%. The short-term interest rate inflation, this is the inflation rate, But if the short-term inflation rate, okay, is currently minus 0.1 and it's way below their target of 2%, okay? Now, why is that important? Because it's the only reason as to why the Japanese won't increase the interest rates. They needed to get the short-term inflation to get close towards that 2% target. It's nowhere near it. So that, in essence, is a good sign. That, in principle, can lead us to do the following assumption. If the idea that Japan haven't got a scope to increase their interest rates in the future, then we know that carry traders aren't going to really have a problem with having to unload dollars to go back into the yen. Now, the problem that we've got is the Japanese yen itself is starting to pull back right now. So with regards to news like this, investors are like, okay, they're not really going into the bonds right now. There's no demand for the yen in terms of locking it in as a safe haven. Remember, gold, it's been pulling back, hasn't it? So if safe haven investors are like on the edge of their seats right now, waiting for the next event, we know that Trump's trying to organize a story between Russia and Ukraine. That is going to be welcomed if there is a ceasefire and a truce made. All right. We know the US tariff story with China is also sorted out, but we're getting closer and closer to the deadline before something else needs to be said. Okay. So that could be why gold's price action right now is trading sideways, because they're waiting to see what the developments are on tariffs and trade, any war. But like I've said, right now, hedge fund managers are building positions in preparation for the next hedgeable event to see gold's price going up to the upside. Okay. But going back into the importance of the Japanese yen, if investors are seeing that, okay, they're not going to be increasing their interest rates in the future, we may as well start taking some of that yen and transact on it and then put it to work in the marketplace, which means they'll buy yen, they'll borrow yen, and then they will convert yen over into the dollar. And then the dollar in principle will start making a bit of a move to the upside. The stock market will equally welcome that because the appreciation of the US dollar is coming into play. And then that naturally will then end up sending Bitcoin higher. But hold on a second, Tino. Isn't it if the dollar goes down, Bitcoin goes up? And if dollar goes up, Bitcoin goes down? Yes, you would think that that was the case, but there is a clear disconnect. How is oil's price moving alongside dollar's price? It doesn't make sense because there is a clear disconnect, okay? So what we've got to take into consideration is to start thinking outside of the box. If the dollar dominance itself is going down, okay, going up, and Bitcoin's price is going up, it means that investors are now starting to come to the idea that there is an appreciation of dollars being accessible. It's being available right now. If the scope of the future is not looking good for the dollar, investors will want to try and capitalize on dollar's appreciation to the upside, okay? So if you start to see dollar dominance going up and Bitcoin's price going up, which is what we have seen happening, okay, then you can say to yourself, right, investors are taking advantage of that small appreciation, which when you think about it, when you're buying millions and millions of dollars worth of Bitcoin, it does make the difference if you pay attention to what's going on the dollar, okay? But right now, you can see that they're sort of trying to come away from the euro. They're sort of coming away from gold, coming away from the Japanese yen, and maybe going to start going back into the dollar for the short term. We could make the assumption dollar right now is going to be coming back into these ranges up here, possibly, but it all depends on whether or not investors are still in the frame of mind that they want to stay in European stock as opposed to US stock. Now, the only way you can back that up is if the yields themselves start to come down. And we're going into the open very shortly, and the yields are marking higher, and that usually is a bit of a problem for the stock market. But of course, going into the volatility index, you can see that that looks like it's being primed to come down, but you can see in the out of hours, it's starting to gap up. So it's going to be very interesting to see how the volatility index plays out in today's session. A lot of complacency is happening in the marketplace, and that is evident from the volatility index itself. So investors aren't really having to hedge themselves anywhere because they're like, okay, looks like things are okay. All right. So what the ideal scenario for me today would be is that the NASDAQ and the S&P end up closing positive with high volume. It needs to be the case to solidify the idea of the bull run. Okay. Now, going over into cryptocurrency just to understand where we are with Bitcoin's price action, you can see Bitcoin's price is starting to come down, and it looks like they're on the possibility of a vector candle recovery region right here. If you go down to the 15-minute time frame, you can see that we do have some vectors inside of this range. Or is it on this time frame? No, it's, yeah, there's a vector candle down there, but there is vectors inside of these ranges on smaller time frames. But what we're looking at realistically is the fact that the bids are there. Look at all these bids, okay? So someone just even came into the live and they were saying, oh, I really want Bitcoin's price to be lower. God forbid that is a bearish comment. Don't say that you want Bitcoin's price to be cheap. You don't want Bitcoin's price to be cheap. It's on the premise that you want to buy Bitcoin at the highest possible point and it continues to the upside and it doesn't bloody stop. How does that make sense? It doesn't. You know, and when someone challenges the idea of if prices are going down and you're thinking it's going down is bearish, they don't understand trading at all. They just want to just see Bitcoin's price going up. And that's not their fault. That's just probably because of the way the education on understanding how markets work. And of course, experience comes into play. If you don't dive into the game of trading, you'll start to understand that when prices rise, it's not because people are buying, it's because people are selling, because you can't buy if no one sells, and if you can't sell, no one buys. And someone did say to me, Tino, the market is not just about buying and selling. Well, frankly, it is, because you can't magically transact with nothing. Given that the stock market and all the marketplaces, only 5% of the activity comes from retail. So that means there's market maker against market maker, liquidity provider against liquidity provider, hedge fund trader against hedge fund trader. Why? Because there's no one that's going to always have the same opinion about value. And that's what's really important when you are coming to the game of trading in itself. This came out. It says here that Thumbs Up Media officially files to trying to buy this story of buying $500 million worth of Bitcoin as a treasury reserve asset. Whether it's true or not, I don't know, but it's all speculation for me, unless we do see that happening. I mean, if you guys could shed light on that, happy days. Quickly going over into liquidations on Bitcoin. We've got sideways price action, and we can see that we've got quite a few long liquidations down here. Short sellers are starting to come in and open shorts on Bitcoin's price action going to the downside. But just be very mindful, because the market is coming back into a point in the chart where it can trigger its memory to go up. So just take that into consideration when you are trading Bitcoin. Going over into Solana, same thing. It looks like there's controlled movement to the downside. And if you go back and study the way price moves, you'll find that when it starts to drop down slowly, it's a slow collection of orders that could imply that there is going to be volatility coming into play, which could effectively send everything back up. And by the principle of the hybrid system, you can see Solana staying inside of the psychological ranges. And the psychological range is effectively the first high and the first low that's formed at the start of the trading week. Okay, so that's really important for us to understand that. Going into Ethereum, same story. It's made a nice move up. It's going to more than likely correct down back into the psychological ranges. That's what we're expecting. But more importantly, when they're stuck inside of this range, we know that volatility could come in at a moment's notice. So right now, given that it is stuck in a range, can't really do anything until you start see something happening. And that something happening is going to be on the back of the fact that the stock market is going to start making a bit of a move to the upside if the interest is there. NVIDIA currently gapping down at the open. Tesla is currently gapping up at the open, clearing out this gap to the top side of around $346. Microsoft, I'm talking about the Magnificent Seven right now. Microsoft is getting very, very close to its significant high up here. So you can see that it's getting very, very close. It has gapped down a little bit, but you've got this big imbalance right there, which was off the back of the news over the weekend. Amazon going into it, it's currently gapping down. It has got a gap over here, which I would expect Amazon to try and fill this gap at some point in the future. Maybe happening today, because we're very, very close towards that point. And then going over to Meta as well. Meta is gapping down, got an imbalance up here that I'd expect it to try and take. And of course, Apple, with the release of the new software that's coming out, the operating browser, the bloody hell, whatever it is, man, Apple just makes it difficult. Anyways, we've got this nice gap right here that's going to become into play at some point. Even though it is gapping down, I'd expect them to try and fill that gap overall. Okay, cool. Quickly just going over into this from yesterday's price action. Okay, stocks that were up on volume was 121, down on volume is 82. Now, the problem that I've got is this. If we're not seeing an even distribution, or sorry, of a distribution which is more weighted to stocks being up on volume, then it kind of then challenges the idea of a bull market in principle, okay? So right now you can see 121 stocks up, 82 were down. So that kind of is counteracting the idea of sentiment across the board. What we want to see is we want to see 121 stocks up on volume, 20 stocks down on volume as an example. Today could be a different story. We might hear some good news about this story over here, and then happy days. The stock market then ends up making a nice move to the upside, and then we do see volume coming in. But given that they just snubbed the idea of the US credit downgrade, tells you that investors are not bothered about it. They're really not, which means that the only next thing that can happen is the market just continues with the narrative that we've got so far, which is safe havens are starting to correct. They're not moving as much. There is a little bit of complacency right now with investors, which could then effectively lead price action to continue to move to the upside. Okay. Bitcoin is at a price that where retail can't really afford it to make it any real gain, but big players are happy to just soak it all up, just like they have done previously with gold. You see, the thing is right now, the problem we've got with cryptocurrency is this. There's no one really buying it as such. Well, yeah, you are buying Bitcoin. You can go and buy $100, $10,000. You know, you can go and buy $20,000 worth of Bitcoin. Unless you're buying Bitcoin, unless you're going to buy $105,000 or even obtain one whole Bitcoin, okay? Technically, you would need such a significant move on Bitcoin to even generate a return. You'd only be buying it for the sake of buying it, okay? But what's going on right now is Bitcoin's getting to a price point where the big boys are using it, in my opinion, as hedges, okay? Who said it? Did Vance say it? No, Trump's son. I think Trump's son said it. He said that Bitcoin is the greatest hedge as an asset, but he still thinks real investment is his bread and butter. So you give and then you take away, okay? But you can see that Bitcoin is behaving like a hedge. Look at the price of the ETF itself, all right? Here we go. The price of the ETF has taken out the $60 mark. I'm looking for next areas. I want to see Bitcoin going over to 70. That's what I'm looking for in terms of the cost of the ETF itself. The ETF is so close to its all-time highs as well as Bitcoin, but you can see it's just clear accumulation happening. Now, you're either going to buy, let me explain something. You're either going to buy Bitcoin itself and put 100 grand and pick it up and you own yourself one Bitcoin, okay? Or you go and buy yourself the ETF, which as an entry point is much ideal for anyone, where you can still benefit off the back of the exposure of Bitcoin. You just don't hold the Bitcoin. And that's what I think is the problem. Okay, a lot of people are like, it's not your Bitcoin, it's not your keys, not your coin kind of story. Well, look, are you here just to hold the coin? All right, if you are, you never need to worry about anything ever again. Just go and buy it and then go about your day. Don't waste your time going onto any platforms or about anyone talking about crypto. If you've got a belief about Bitcoin, run with it, okay? But when you've got the ETF itself currently priced at $60, it can make it a little bit lucrative, which is why you've got such a heavy balance right here of contracts in the ETF, because that's what institutional investors are doing. They're piling into this, okay? And they are effectively shorting or going long on Bitcoin in the futures market. And that is evident with this sort of behavior right here. And that's the problem with crypto right now. It's getting to a point where certain crypto coins or legacy crypto coins, like your Bitcoins, your Ethereums, and your Solanas, they're sort of getting to prices where you would have to hold a significant amount of it for you to replicate the idea of it being back in the day when it was really cheap, where you would hold 10,000 Bitcoin and you just make so much money off it because it appreciates in value. We ain't going to ever see those really, really, really cheap prices anymore. So a lot of people are cottoning on to that. So they're thinking, you know what? Does it matter what price it is for me? No. All what matters is the same price movement from from $105,000 Bitcoin to $120,000 Bitcoin is no different to it moving from $10,000 to $20,000. Fundamentally, it doesn't matter to you. You just care about the movement of Bitcoin, which is where, in my opinion, cryptocurrency has gone right now. Institutional investors are using it for their own accord. They're going to try and put it in as a treasury asset as well. So you can see that Bitcoin has now become more corporate than for the man itself, because it's getting to prices that no one in retail is going to be able to go and pick themselves up 50 Bitcoin. Or, I mean, you've got a better chance of someone picking up 1,000 Solana, or not 1,000 Solana, but 1,000 XRP, or 10 Ethereum, okay? So people alternatively are just going to the futures market saying, you know what, if it's projected to go higher, I may as well go and put some money into leverage and take advantage of not having to use too much money. And then, yeah, you do run the risk with leverage, but I'll speculate on the value of it going up in the future. Do I need, and let's be honest now, if you were, if someone come to you now and said, I'll give you, no, I'm going back to the old question. Are you in it for the tech? Because that's what this is. If you were in it for the tech, you wouldn't have this. You would not have leverage. No one would speculate on its price. They just hold it and just never let go. There'll be no one wanting to short it. There'll be no one wanting to long it. And that's the truth. You know? Right now, it's all about how much money can I make off it? And that's the truth. And some people might not like that. You know, I still hold Bitcoin, yeah, but I still trade it as well, Tino. That's fine. You know? And again, if Bitcoin goes to significant price points like the 13 million that Michael Saylor is wanting to see it go to, like this guy with the amount of Bitcoin that he's got, and it goes to 13 million. You understand that this, he would be effectively in a position to clear off everybody's debt, every nation's debt. Do you understand? Especially at the rate that he keeps on buying it at. But hey, it's another story. Any other questions before we get the live done and dusted, ladies and gentlemen? Do we have any likes on the live stream? Do we have, like, you know what? Let me just, hold on a second. Hold on a second. Let me just get this flipping asset up. I know it's an asset that guys want me to talk about. Let's just go into it. Fartcoin, here we go. So, Fartcoin. It did it in the end. Didn't quite take that range. Okay, Fartcoin, man. It's a very interesting asset. Anybody that wants to get a little bit of excitement in their life, sell XRP and buy Fartcoin, you know, because you're gonna see some very interesting movement. And you can see that when it consolidates, But breakouts are on the cards for Fartcoin. There is a breakout pending. And yeah, that's something you want to pay attention to with Fartcoin. Here we go. If market maker and manipulation exist, Illuminatis exist. Yeah, probably. Look, listen, you don't want to worry too much about manipulation and the whether it exists or not. Do you want to see manipulation? It's right there. Look, it's a wick. Because price came up aggressively and came back down. It's a form of manipulation. You know, we tailor it as, and we call it manipulation. But if we said it was just a wick, and what's a wick? Oh, its price goes up and it comes back down really fast because they hit a bunch of orders and triggered a lot of stops at that point, shook out retail traders, and then it reversed from that point. You know, if we just labeled it as that, then we wouldn't be speculating on whether the Illuminati exists or the market makers exist. Like, it's just, this is just the nature of the game. That's what they have to do. They have to run on liquidity and come away and build more liquidity. They have to get interest. Look, the interest is clear as day there. Look. What does this say? It says that there's lots of longs coming in, but it's equally there's shorts coming in. So where's everyone in crypto right now? Flat. They don't know what it's doing, you know? Do you think Sol will hit its all-time high again before the market turns? Being in the US legally can only spot buy. So curious about my spot positions. Again, with Solana going into its all-time high, you've got to look at it like this. Solana is very, very prone to the idea of meme coins. And if meme coins start to come into play and there is a trend happening on meme coins, then okay, it's going to start making a bit of a run up. You see this run up right here? That right there was effectively the Trump story, you know, with the Trump coins and what have you. So that really did push Solana back up quite a significant amount, to be fair with you all. But yeah, it's one of those ones realistically. I mean, if we go and look at the altcoin season, dominant season and what have you, it does show you that we are technically in altcoin season. But it would only be, I think the idea is that investors ain't going to be selling their Bitcoin. And I think the only reason why altcoin season's coming into play is because no one else can really start buying Bitcoin or an amount to an amount of significance that it's going to be worth them holding it for a period of time to make quick money. So that's why I think altcoin season is going to come, and it's equally going to go just as quick, because people will see that they've made some money on their altcoins and then they will equally take it out. I think, again, everyone in cryptocurrency, I'll stand to be corrected, and I would love to know your thoughts on it. But I think everyone that's coming into cryptocurrency right now has pretty much got to the idea that you just need to get in and make as much money as you can from it and get out, and that's really the goal. And if you are really diverse with it, buying cryptocurrency, buying Forex, buying commodities, buying stocks, you're just maneuvering asset classes. That's all you're doing. You're just moving your money. And if you start becoming less, if you're, how can I put it to you? If you're not married to the idea of crypto. Now, I'm not saying this like, oh, I'm negative crypto. No, starting to try and get you all to understand that when you expose yourself to various marketplaces, because Forex is going to have a great time, and then you'll find that Forex doesn't really move too much, and then you'll start finding the stock market moves, or you then start finding that commodities move really well. So if you don't expose yourself to taking advantage of various changes that happen seasonally in terms of asset classes, if you're limited to just cryptocurrency, you're then just always forced to just hold on to it and hope for the best. That's a dead strategy, ladies and gentlemen, in my opinion, and I get it with the spot. And if you can't buy and what have you, I get all of that. People are saying F hodling. Wow. Not something that I'd see. It's what I mean. It changes, doesn't it? Anyways, with that being said, ladies and gentlemen, your market is now actively open. I'll be tuning into you all later on this evening. Make sure you hit the like button and subscribe on the way out. And just keep an eye out on the NASDAQ for any trickery, but more importantly, watch out on what Trump says today if he does reveal anything. But I think it might be a quiet day. All right. Mad love and respect, guys. Take care of yourselves, and I'll tune into you all later. Peace.